I'm going to be walking through a trading setup that I always look to take every single day. It shows up quite literally every day in the market, and when traded properly, this can give crazy risk rewards. I'm going to be breaking this down to the smallest details. So it will be very confusing at first, but I will be uploading more videos like this, and eventually you will get the hang of it. Although I will admit, it does take a lot of time. It is not something you can learn overnight. It's quite literally hundreds of hours of observing price action and learning all the small things that price does. So as you can see, this setup has done me pretty well on this Express. I'm being moved to live as we speak. My account's paused. So yeah, today's setup that formed was a short. Now, before I actually show you the setup, I'm going to be listing the things that I look for in every single setup that I look to take. Now, in this case, like I said, it was a short, it was a continuation to the downside. So we're looking for lower high, breaker structure, trend line liquidity, and point of interest. So we can see price is making its move to the downside, and you can see it's trending slowly here. And then here, selling volume really started to kick in. Now, I'm going to be drawing everything just to make it clear. Now, we come down, we create this low, and what price starts to do is create trend line liquidity. Okay, so we have trend line liquidity, and price is slowly making its way up. We also have a point of interest. So what is a point of interest? Point of interest is a bearish candle before a bullish move, or vice versa. So in this case, it was a short, so it's a bullish candle before the bearish move. So as you can see, I mark it out. So this is my 1 minute point of interest. Now, what I like to do is also go through other time frames to see if there's also a point of interest in the same area. We can see that on the 100-tick time frame, it's also a bullish candle for a bearish move. So I can label this 1 minute / 100-tick point of interest. Now, what happens? Price is making its way up to our point of interest. We have an internal breaker structure, and we tap into this point of interest. Now, one thing that price does a lot with this setup is something called an impulse candle. I need to add that here as well. So what is an impulse candle? This impulse candle is basically price saying that, okay, we're making our way up. Now price is stopped here. Okay, so it's respecting this internal high, and we're looking to create a lower high to continue to the downside. But what price does is it sees this point of interest up here, and it basically has an impulse candle, grabs that point of interest, and then the move begins. So you can see here, price started to slow down here. Then we had that impulse candle, respected this point of interest, created a lower high. And then if we drop down to the 100-tick time frame, I like to switch between time frames a lot. It helps me understand price action in the smaller details as well, which is very important. You can see that price reacted off the point of interest, started to make its way down. Then we had a move to the upside. We wicked and we made our move back down. Okay, so it's showing that price is respecting this zone, and it's most likely going to continue to the downside. Now, this probably wouldn't have been our first entry. We would have had to wait for a confirmation, a second confirmation. So that second confirmation came here. We had a 100-tick time frame point of interest. As you can see, when I go back to the 1 minute, price does the exact same thing. So we have our first breaker structure to the downside after respecting that point of interest and creating a lower high. We then start to build up trendline liquidity, which is one of the things that I said is most important, because it's showing price is making its gradual way up for that big impulse move to the downside. Now, price is creating trendline liquidity. We tap into our point of interest, and with this point of interest setup, I like to have my stop loss at the wick of the point of interest. So in this case, it's 8.5 points. And I usually target the low or the high, whatever way the trade is going. So in this case, it's bearish. So I'm targeting the previous low. And there you go. That's a 1 to 6. So this is an example of a bullish version of this trade that occurred earlier during the week that I actually took. So you can see what price is doing here. So price was pushing to the downside. We created liquidity. Then we made our way up, breaker structure to the upside. We continued to hold this level. We had a move to the upside. We took out that high. And now price came back down, retested this level of liquidity, but we swept through it. Now, when we sweep through, you can see that price is gradually coming to the downside. And what does it do? It creates a higher low because of this 100 tick time frame point of interest. Price taps into it, and we basically. And the good thing with this setup is once you're in, you can basically move your stop loss to break even pretty quick. So you can see we got tapped in, 100 tick point of interest. We had that trend line liquidity, and price sweeps the trend line liquidity for a continuation to the upside. And you can see we get tapped in, and price basically goes pretty well. And I did close my trade somewhere around here. Yeah. There you go, close my trade. So yeah, on the bigger scale, once again, I'll repeat everything I see. Price has created this low here. It's made its way up. So you can see we've shifted structure in the market. We have taken out these internal highs. Now we have had trendline liquidity here. Price sweeps it, taps into this point of interest for continuation to the upside. And that's my setup.